Alrighty, guys. For those of you who have been here waiting, thank you so much for your patience. We're just waiting for everybody to get situated. But I would like to personally thank all of you for being here today with us and watching this information that we're about to give you regarding investing in Orlando and the COVID-19 crisis that's affecting the whole world. So first of all, thank all of you guys for being here. And I would also like to personally thank both of our panelists for being here as well. Today we have Mr. Zane Place, who is the Sales and Marketing Director of Bellavita Resort, a luxury vacation community here about 8 minutes from Disney World. And we also have Mr. Luiz Batalha, who is the CEO of ModelR Property Management Company. And they'll be giving us their own personal experience in regards to the Orlando vacation home market. And they'll also be talking with us a little bit more about their personal opinions on how they think the COVID-19 crisis will affect the vacation homes market in Orlando. So first of all, Zane, thank you so much for being here with us today.
No, thank you for having me, Dunya. I just want to introduce myself. I know Dunya did a little bit. I am the Sales and Marketing Director for Bellavita Resort. We are located conveniently right off Highway 192, just down the road from Disney, but also convenient to Universal Studios, all shopping, dining, and entertainment attractions, as well as the airport. So we're really very well centrally located here in Orlando, or Kissimmee, technically, sorry.
Sorry there. Also, thank you to Mr. Luis for being here with us today. If you want to give a brief introduction as well.
Absolutely, absolutely. As Dunya mentioned, my name is Luis. I'm the CEO of ModelR Property Management. We are short-term vacation rentals here in Orlando. And yeah, I'm super excited to be here this afternoon, kind of share with you guys a little bit more about what's going on as the industry as a whole, and also as our, with our property management company. So yeah, I'm looking forward to this little Q&A. And afterwards, if you guys have any questions, I'll stick around to answer any kind of specific questions that anyone might have.
Awesome. Thank you so much for that. So let's go ahead and kick off the Q&A session. My first question will be actually for both Zane and Luis. I'll have Mr. Luis answer first. So Luis, in your opinion, with all of the experience that you have in the vacation home market, how would you say thus far that COVID-19 has affected the daily operations in your own company?
That's a really good question, Dunya. So in our own company, we've shifted in a lot of different ways. Just to kind of backtrack a little bit to give you guys an idea of kind of what's going on here in Orlando with the whole COVID crisis. So there's been an executive order that was put in place, I believe 2 weeks ago, that kind of it put a pause on all short-term vacation rentals, 30 days or shorter. So basically, if you have a new vacation rental guest who wants to come and stay 30 days or shorter, there's an order in effect that they cannot check in until April 30th. After April 30th, I believe everything will return to normal. So what we've been doing, we've been shifting a lot of our strategies. We've been changing the ways we do things to first and foremost to get guests through the door, right? So we've been accepting 30-day bookings. We've been asking, the current guests that already have reservations to extend it to 30 days to accommodate for this order. So we're definitely keeping things kosher in that regards. And then with the cleaning, we're taking an extra preventive measures when it comes to cleaning. We're doing sanitization, Lysol wipes everywhere. Just doing like basically a deep cleaning, making sure that we follow every single CDC guideline. For those of you who don't know, CDC is Center for Disease Control. They have a very strict guideline of how to handle turnovers, how to clean everything. So we're following those guidelines to a T to make sure that every guest is protected. So that's kind of like some of the things that we're doing, differently personally. And I think later on we'll talk about how the industry as a whole has kind of shifted.
Yes, definitely. And thank you for that. It's definitely good for the guests staying in your home to know that those extra precautions are being taken. I'm sure that they feel a little more at ease with that. And so now I ask the same question to Mr. Zane in your respective field. So in the real estate market, how would you say thus far that the COVID-19 pandemic has affected your own personal showing of homes and your own experience in the real estate department?
So it's kind of unique how it's affected us. We are deemed essential, but obviously we want to do, as Luis says, and follow all CDC guidelines when it comes to interacting with our clients and the prospective homes that they may be interested in. But we've kind of had to adjust, is really the best way to put it. We've closed our model home to the public, but we do virtual tours and we can show physically by appointment. So while on the back end of sides, things have continued moving, same processes, same way of purchasing a home, placing a deposit, going under contract, none of that's changed. And for us as new construction and the fact that we're so early in a build out, financing hasn't really affected us because our pre-approvals are still months away from closing. So we've kind of been unique in that, but we've had to definitely adjust our sales tactics and our outreach more. So we're doing a lot more virtual tours. We're doing these webinars, but we're also doing it by appointment only. And we're reaching out to people really in different ways than what would be our normal traditional way of following up with a customer or a client. And we're just adapting is the best way. Everything's still moving forward. It's just slightly different. A good friend of mine coined the phrase pivot and adjust. And I think that pretty much describes what we're doing as an industry right now.
Yes, I completely agree. I think we're all learning how to navigate these unprecedented times. So yes, definitely a learning experience for everybody involved. But luckily, we do have the technology to make it a little bit easier for all of us. So again, a question for both of you guys. Zane, if you want to take this one first. So how has COVID-19 crisis affected not only your day-to-day life with the real estate, with real estate, but the industry of vacation homes as a whole? How do you feel that that's been affected?
Obviously, it has been. I'm not even going to try and sugarcoat that to you whatsoever. I mean, when people are forced to stay at home and they can't vacation investment may, in their immediate mind, not seem like something that they want to think about. And so we've kind of had to go that extra length to assure them that we feel the market will bounce back, and that Bellavita as its own, from my perspective in my community, is very uniquely positioned because we do allow long-term living in there as well. But we are a vacation resort community by design. So we have a little bit of a different place in the market. But the easiest answer is that we've had to go above and beyond a little more just to assure people that it is a safe investment to make. Because when you look at it now in the short term, I can easily see how it fogs glass a little bit on if it's a good idea. And a lot of people want to wait it out. And that's a little bit what we're experiencing too. Our investors and our prospective clients haven't lost interest. We've only had a couple that have surely said that they want to wait months. Most of them are still moving along with everything. So we had a little bit of a hiccup, but it's just our job as realtors and as a sales and marketing director to help bring back that confidence in the product. And that's really what we work to do every day.
Yeah, that is very true. It's all about adaptability at this point, definitely. And so I pose the same question to Mr. Luis. How do you feel that the vacation home industry as a whole in Orlando has been affected by the COVID-19 crisis?
Yeah, that's a very good question, and the answer to that is, as a whole, the industry took a pause. Most of the players, most of the companies who were doing property management, they completely just closed their doors, closed up shop until this executive order gets lifted. That's kind of the reality of it. It's not many companies were positioned like us. Thankfully, we were positioned very kind of uniquely in terms of we had a ton of bookings that we had for future, so we could call guests up and either transfer them or ask them to extend their booking, and B, we were able to shift very quickly to 30-day rentals. So we're still open, we're still conducting business as usual, we're accepting bookings that are 30 days or longer, and yeah, so with as Zane kind of alluded to, Bellavita's positioned very strategically in terms of location, what they offer. I think the saving grace really for our company was that actually all the homes in Bellavita, which we have quite a few here, they all have pools. And that was the one thing that these these guests that are staying now 30 days or longer, that's what they wanted. So having standard homes with standard pools was a game changer for sure. So that helps us stay alive. And even though the clubhouse might be closed and the amenities might be closed, we're still getting a lot of people coming from, even domestically, even within Florida too. Maybe people who live in apartments or who don't have their own pool. They're all flocking in here to just enjoy a house with a pool and a jacuzzi and a little grill on the outside. So it's we're definitely seeing a huge influx in that. And then what other vacation rental companies are doing, what I've heard is, since they closed their doors, they're lowering the AC temperatures to kind of help save on costs on that. They're doing maintenance on the property, preventative maintenance, things like that. So, like, now that there's no guests kind of in the properties, and these other companies, I've heard, they're doing other things to make sure the costs stay down for the other owners. We don't have that problem. We actually have the opposite of that. We have too many people that want to stay and not enough houses. So we definitely need more houses to accommodate our guests. So, but yeah, like I said before, we're doing very strict cleaning guidelines to follow the CDC guidelines. And yeah, that's basically what how we've been doing, specifically, and then as an industry as a whole.
Can I interject a little bit? I do have one thing I would like to add about dealing with the current situation and how it's affected us in interacting with our investors. One thing that we've had to do a little bit is kind of prep them for everything and what to expect. Having somebody like Luiz here works perfectly because they have been able to pivot and do 30-day plus rentals to generate revenue for our owners. But we spend a lot of time talking to our investors and even potential ones to kind of, for lack of a better phrase, soften the blow about what's going to happen, to assure them that the market is going to come back up. And keep in mind that, when this happened, it did happen, if it was going to happen, it didn't happen at the best time because it's right as we move into summer. But at the same time, it's not necessarily our peak rate season. So there's still plenty of time for them to make that income back up. But also it's part of, it kind of goes back to what I was talking about, our unique positioning, is that they can feel comfortable knowing that even in these times when vacation rentals aren't necessarily possible, or it's a little going to be iffy for a little bit, their home is positioned to have something of a better option or a different option in these times. They can go long-term, they can go corporate. Similar to what Luiz is talking about, 30-day plus, there's different markets that their home could be placed in to kind of balance out as much as possible for that vacation. Is it necessarily going to mean it's more profitable? I don't know. We've seen people find niches to where it could be. But at this point, it's really just about softening the blow and still making them revenue. So in the end, they're making a profit, even though this is going on.
Yeah, and actually, thanks so much for bringing that up, Zane. The reality is, in a full transparency, the revenues that we're bringing in now during COVID, this COVID pandemic, is a lot lower. We're seeing 25 to 35% lower revenues to attract those people in. So I don't want to sugarcoat things and make it seem, oh no, everything's fine and dandy. Yes, we're still operating at full capacity. Yes, we still are like basically 100% occupied. But in order to get those occupancy rates up, we did have to drop the prices significantly. But all the owners are super pleased. They're super happy. They're every single owner that I've talked to, they're like, hey, at least we're making some money. They were happy that there was at least some money coming in, which is at the end of the day the goal. And exactly how what Zane was alluding to is kind of softening the blow, because there's a lot of industries right now that are not being able to sustain, during this pandemic. So our goal, our number one goal, is to make sure our clients are taken care of. And obviously that's kind of why we love working with Bellavita, because of just everything the properties offer. Every single home, we know what we're going to get. We know what the guests are going to get. So it's been awesome. And we manage a lot of homes in different communities all over Kissimmee, Orlando, Davenport. And I'm very happy to say that our top 2 performing houses are both located here in Bellavita. So that just goes to show just the level of just the caliber that we're dealing with here with Bellavita.
Yeah, that's actually very awesome. It really does differentiate and set us apart from the other communities. Just the numbers kind of do speak for themselves. So yeah, thank you for sharing, both of you guys. Those are very great responses to a very commonly asked question during a time like this. So for both of you, also a great question. With the experience that you do have in the vacation home industry, What would you guys say? I'll kick this one off to Luis primarily. What would you say is the main benefit of investing in a short-term rental as opposed to a long-term rental investment property?
I get that question a lot, and it's a very simple answer: more revenue and higher ROI. We actually did a case study. We had a client who had 200 long-term rental properties. We converted, I think it was about 20 of them to short-term rentals, just to compare. Hey, how much more revenue are you going to make doing short-term versus long-term? And we came back. We did I believe it was a 6-month study with a trial. We put those units on the market for 6 months, and at the end of the study, the client generated, or we generated for the client, it was about 40% more revenue than he was making long term. In some cases, we even saw up to 50% more revenue. So it's definitely when you have that much turnover, you have a lot of guests coming in and out. You get to charge people on a daily basis instead of on a monthly basis. It's a no-brainer that you're going to make more money. But it just comes down to finding the right company to manage that, right? So you have to make sure the cleans are done properly. You're taking care of the guests. There's just a little bit more added, I would say, work to it. But if you find the right management company to make that happen, hands down, you're going to make more money. So that's basically the biggest difference between long term and short term.
Right, and you do have the experience in both of those, so it's very good that you do have those, I would say, qualifications where you can give your point of view on both sides to it, and I'm sure both sides have of their positives. But yeah, it has been proven time and time again that short-term rental really is the better option of the two. So thank you for that. And another question in regards to short-term rentals: of all of these homes that you've experienced and of all of these homes that you do the short-term rentals for, what type of home would you say is performing best? So would you say that it's townhomes or single family homes?
That's also a really good question, Dunya. And the answer is it's single family houses with pools. Uh, Pool and jacuzzi combo is the best. When the house has a pool and a jacuzzi, those perform the best. Barbecue grill outside, that's definitely for sure. That's kind of a high up there on the list of what guests want. And then kind of on the side is they also want a bonus room. So whether it's either a game room or a loft, to have a little cinema room or movie room upstairs, things like that. Those are the type of things that are the best performers. Like I said, the top performing house in our entire portfolio right now, we have a portfolio of over 100 houses. It's a single family home, 2 stories, 9 bedrooms. It's got a pool, a jacuzzi, barbecue. It's on a little pond. It's I'm sure you're familiar. I think you're familiar. Obviously, it's in Bellavita, so it's in one of
Pretty
the.
sure that house is right next door.
Yeah. It's next door to the model house, actually. So if anyone ever comes here to the model house, let's check it out. You guys can see the top performing house right next door. It's beautiful. So that's those type of kind of amenity or the features are what's kind of what sets it apart and why it's performing better than any other.
Awesome. So thank you for that. And Zane, in regards to the features that Luis had alluded do perform better in short-term rental aspect, I know that obviously you are the sales and marketing representative of Bellavita Resort, and I know that you did have some things to mention about the features of Bellavita Resort.
I just realized I was muted. So basically, I can give it kind of a perspective from historically what I've seen investors who are generating good revenue or positive revenues from their properties like to see. So as Luis said, pool, jacuzzi, best combination possible. Small upgrades that give it a good visual pop for online ads, such as flooring and decoration help too. Furnishing is a big plus, but it doesn't necessarily have to be the most luxurious $1 million house in the world, but it needs to be functional. It needs to have a little above and beyond than what everyone else on the market is doing. So kind of comb through Airbnb and take a look at what homes are being rented and see if you can do something a little one extra step above. Always helps. But it doesn't have to be these over the top upgrades. It's little things that give it a visual aspect or a functional aspect that really help. Location, though, I think is the biggest factor as a community, as an investment as a whole. But when it comes to the individual features, pool, jacuzzi, people like to see upgrades in flooring and bathrooms, even though they love to see the shower, even though they're only here for a week kind of thing. So it kind of varies. It's more of getting a shock and awe online and to get that initial push out there and get their attention. So I would say small visual things are actually going to be more revenue generating than some of the more expensive structural changes you can do in a home.
Thanks for adding that, Zane. I actually, I wanted to touch on two things that Zane just pointed out. One, he said furnishing. The other thing, he said location. So furnishing is super, super, super important. Okay, I'm going to give you guys a secret sauce right now. This is the two secrets that make a home sell more on short-term renting, and it's beautiful furniture. And when I mean furniture, it's right now what the guests want. They want clean, modern, contemporary, simple furniture. Nothing overpowering, too heavy. Anything that's contemporary, modern, and clean and simple is going to always alperform. And the second thing is that you've got to have professional photos. If you have beautiful furniture, simple design, modern, contemporary, and professional photos, you're going to have no problem renting your houses out through these different channels. So those are kind of the little secret sauce. And then the other point, this is another little trade secret that Zane pointed out too, was location. So for those of you that don't know, what most people do when they want to rent a house is they open up whatever platform they're on, whether it's Airbnb, HomeAway, and they open up the map. And they see the location of the map of where they want what they want to do in that city, and then they just see the clusters of houses nearby. So, for example, here in Orlando, Kissimmee, people open up the map, they see where Disney is, and then they see the houses nearby. They see the clusters of houses nearby Disney. And when you're scrolling through the map, Bellavita was one of the closest you can get to Disney. So you're going to immediately see the whole clusters of houses here in Bellavita. And then it's up to us or the client to differentiate and make sure that their houses stand out among this cluster. And that's what we do best, is we make sure all our houses stand out through photos, through furnishings. And we also have a lot of other little trade secrets I can't really disclose right now that help us get the listings kind of show up first. But yeah, thanks for pointing that out, Zane. And I appreciate you for reminding me about that.
Okay, so thank you guys both for that. And so now kind of touching bases back towards the COVID-19 topic, because obviously that is something a lot of people are worried about when it comes to investing. This is a question for both Zane and Luis. Zane, we'll start off with you on this one. So how would you say that the market was performing before the COVID-19 crisis? And based off of that, how would you expect the trends to continue once, hopefully this all gets a little bit better?
The market was good. We were generating a lot of interest, especially for the fact that we just started vertical construction and we did our pre-sales. So ahead of time, there's actually a large gap of, I'd say, lack of activity on our part just because of the nature of design. But we were going well. We were doing tours. We were generating, guest reactions and client interactions every day. Had several interested parties. We had several contracts under negotiation. Some are still going through, a couple of calls, but none of them's actually dropped. And that's kind of what we're experiencing now, is a pause. And the way I expect it to go up, I expect it to continue to move. It might be at a bit slower rate for the first couple of months after everything starts moving again and we all get back into our everyday life and dealing with traffic. But I think it's just going to continue to move forward. I think it's going to take a little slower start. But think of it kind of like when you start at a hybrid car or a Prius at a stop sign. Putter's like a go-kart at first and then takes off like a normal car. I really think it's going to take off back to normal eventually. Will that be next month? No. But I think within 3 to 4 months, we're going to start to see the market generating at least momentum back to where it needs to be. That being said, it's a great time to buy a home. Rates are low and you can find incentives. For example, right now, in addition to other incentives or the traditional ones we were already offering, if you buy a home before June 1st, you get $10,000 off. So there's a little bit of a plus to buying right now. And that's what we're trying to encourage people, because the market's just going to continue. And once the parts open back up and vacation rentals flow back into it, they're going to be busy again. I just think that's the nature of the beast when so many people come to Orlando. And I think people kind of underestimate their others' determination and love for Disney and love for Universal and love for travel. That being said, everybody be safe. Now is not the time to jump on a plane and go experience life.
Yes, definitely. Thank you for that. And so now, Luis, from a property management point of view, how was the vacation rental market performing before COVID-19? And how do you expect the trends to continue again, once hopefully this all blows over?
Definitely. So prior to COVID-19, we were ramping up for another little high season, a little peak of what we call it. We had an incredible December and January. And then we were getting ready for our March kind of spring break peak when this whole COVID thing happened. At the end of the day, we actually just finished we finished our March P&Ls last week. So at the end of it, we actually didn't get hit as hard as we thought. Obviously, it wasn't those peak spring break rates and those what we were expecting. But since, like I said, since we were able to shift and adapt so quickly and transfer and transition a lot of our guests to 30-day rentals and still be within that executive order and still keep our doors open, we saw about a 30% decrease in revenue over last March. So it's still something, so March actually performed just as well. Actually, I would say March performed a little bit a little bit lower than what February performed. February is not a huge month, but March was supposed to be. But like I said, we saw a little bit of a hit, not as big as we thought. April is going to be interesting. We'll see how that's going to end. And but yeah, that's how it was before. During like I said, we're still in it right now. And then after, a lot of the industry experts, they are anticipating by June everything's going to kind of go back to normal. That's again, everyone thought it was going to be May. Now it's June. Who knows how much further it's going to be pushed back? But the industry experts are saying like a mid-June is when things are going to start ramping up. And they said that there's going to be just a huge influx of travel once everything opens up, once everything goes back to normal, once the parks open up again. I think it's going to be another another little mini peak season per se once everyone starts opening their doors again.
Yes, agreed. Because at the end of the day, I mean, Orlando, for a while is the number one tourist destination in the world. So I don't think that title goes away very easily. So Luis, obviously you're the CEO of ModelR Property Management, a very successful property management company here in Orlando. And so what would you say that ModelR does differently than other property management that sets you guys aside from other property management companies?
Yeah, absolutely. Thanks for that. We definitely pride ourselves in being the best at what we do. To those regards, I think the way we set ourselves apart from anyone else is we adapt, we listen, and we execute. Especially now during this whole crisis, we were able to adapt very quickly to what's going on. So very, like I said, we shifted the way our business model was going. We stopped doing short-term renting and started going more toward 30 days. And then once that order gets lifted, we can very easily, at the touch of a button, basically go back to accepting reservations that are less than 30 days. So I think because we were like kind of positioned uniquely and set up with our software and our platforms to just be run so efficiently, we can very easily shift gears. So that's, I think, number one. Number two is we listen. We listen to our guests. We listen to what they want, to their needs. We're able to kind of make sure that every guest is taken care of. All of our properties go through thorough cleaning, things like that. That's pretty basic, but I think what sets us apart is we go above and beyond. We leave extra amenities so guests don't have to ask for more. A lot of other companies, they just leave the bare minimum, so they just want, hey, just one, and that's it. We leave extras because we want guests to have an amazing experience. Every single unit that we have has a tablet, little tablet with Orlando attractions. They can buy their tickets, they can call Ubers, order food, things like that, just to enhance the guest experience. And that's that we've been seeing a lot of positive reviews from that. And then at the end of the day, we execute. Like I said, the main, if you listen to your guests and you listen to what they want and you don't execute, there's nothing there. So I think that's another thing that sets us apart, is that we actually execute on what was referred to us. So those are probably the top three things that kind of set us apart from any other property manager in Orlando. And I would even say the world. We have a whole bunch of other markets we operate in. So we're definitely looking forward to being, that game changer in every market.
Yeah, thank you so much for that. And it's definitely true. You do have to kind of go the extra mile to set yourself apart from others. And ModelR definitely does that successfully. So congratulations on that. And so now my kind of the same general question for Mr. Zane. What would you say sets Bellavita Resort, the vacation community, aside and kind of sticks us above the crowd compared to other vacation homes community in the area?
Okay, our biggest benefit is by far location. Not only is it the mileage, we are from, say, Disney or Universal, because there are other communities that are that distance or about the same away. It's efficiency is really our location benefit. We're directly off a main highway that's a straight shot to Disney. Nobody has to really learn their way around. There's very little room to get lost. And even when you do, you're on a highway with signage everywhere. So our biggest benefit is location. The second, I think, is the leverageability in the market that I talked about earlier, where we are designed as a vacation rental community, and that is the way to make the most amount of revenue that you possibly can out of our homes. However, you have the option to do other things. So it all depends on your comfort level of investment. And I think that gives it a lot more stability, because it opens up our market to a wider range of customers. But the biggest thing I can say is location. Another big thing would be on-site amenities, just to make sure that if they don't leave the resort, they have these things there. The biggest one, obviously, is the pool. We do have a resort pool, but every home has one. So that's a big draw to a community, I would definitely say. But yeah, amenities such as the pool are our big feature, but location's our biggest seller. Location and design of homes. Everything else is just an extra little bit that's kind of variable in the market. But I'd say those are the three things that drive it for us.
Yes, I agree. Having personally worked at Bellavita Resort for the last 2-3 years, I have definitely noticed a difference in the guests that would come into the sales center. They would always point out, like, yeah, we've stayed in other communities before, but Bellavita really is it for us because of the proximity to the parks. And not only that, but the tranquility of having your own personal pool in every single home already included in the base price. And so, okay, that finalizes the questions that we had already preset. We do have some time for Q&A with both Luiz of ModelR and Zane from Bellavita Resort. And we do have a question here in our Q&A pool. And this one will kind of be a free-for-all. So this will be for both Zane and Luiz to answer. But this question says, what are the different options an investor has when doing short-term rentals, non-committal versus commitment homes, and the options of either managing your home yourself or going with a company like ModelR? So what different options does the investor have?
Zane, you want to go ahead and start that off with what options they have as far as going with management companies?
Yeah, to put it short, at Bellavita, we're the coolest parents in the world. We allow you to do everything. You can rent it out yourself. You can choose whichever property management company you'd like to work with if you choose that route. You can do long-term, short-term. You can use it as a second home. You are allowed to do things here. We just, for the most part, unless it's illegal, we don't tell you you can't. So yeah, they have those options here, and that's the best part. When it comes to the commitment versus non-commitment, that's more of a property management question, because Luiz can answer that one better. But here, you're pretty much allowed to do whatever you would like with your property from an investment standpoint. So you have that option, but there are really no restrictions from our side on what you can do with the home.
Awesome. And I'll touch base real quick on the short-term renting side, kind of what the options are for an investor. We have two options. We have the commitment and non-commitment. So it's basically a lease or a standard management contract. The lease is basically, hey, we'll lease the home from you for a fixed amount per month. We'll basically pay you rent. it's going to be a much lower ROI than what you would receive on a management contract, because it's a guaranteed income. It's easy. It's cash flow. So it puts a lot more liability on us. So, but there's some investors who want that. And with that kind of lease structure, we allow them to come visit, I think 10 days a year. They can come and stay in their house for 10 days out of the year. And they just pay for the utilities. And it's pretty hands off. But both options are hands off. But the lease is a little different in terms of how much flexibility the owner has, to use the home himself. Then our commitment, which is the standard contract, which is usually we charge a 20% commission off the booking revenue to be able to manage your house. That option, owners, investors can come and use their house anytime they want. They just have to, click on their calendar, click reserve, and they can come stay at their house as often as they like. It's a very easy structure. Basically, we take, the total amount of rents that was produced that month. We take our 20% commission, and the rest goes to the owner. And in that structure, our owners, 10 out of 10 owners who are in that structure are making more ROI at the end of the year over the owners who are in the lease structure. Just because of the way we structured these options, but it's still not a bad. I would say the commitments, the lease structure, they're still making an average of a cap rate about 5%, maybe a little higher. So it's still not bad. But if you want to break those 6-7% cap rates, you definitely would have to go management contract for that.
Okay, Luis, can you do a quick breakdown for somebody who might not be familiar with the term cap rate? Because traditionally that's something that's used in commercial real estate, and for vacation rentals it works because it's kind of an income generating hybrid. But to somebody who's only have experience in residential real estate, they might not understand what a cap rate is.
Absolutely, Zane. Thanks for bringing that up. So it's basically your net ROI, net of all your expenses, what your final return on investment, your profit, whatever you want to call it, is going to be at the end of the year. So when I say like a 5% cap rate, I mean, like, at the end of the year, you're going to have a 5% return on your investment after all the expenses. And that includes property tax, that includes insurance, it includes anything and everything you can name of. So it's basically like it's liquid, clean, cash on cash, a return on your investment. That's what cap rate basically means. You're going to make a very, very healthy return, net of all expenses. And did we have any other questions regarding short-term renting? Let me look at here. Yes, Esther, I believe I answered that. I will be able to send, Esther wants to know if we can send historical data of the numbers. Would I be able to send it to you? Absolutely. And that goes for anybody here on this call. If you guys want to have historical numbers, projections, anything like that, we have a healthy amount of data right now with the amount of houses we manage and how long we've been managing them. So we can definitely give you historicals on any property you'd like. So basically, I'll drop my email here so you guys can email me, and just send me an address, or better yet, send me how many bedrooms your client's looking for. A zip code. Doesn't have to be a certain address. Give me a zip code, and I can give you all the historicals on that. Can you talk about preliminary action potential investors should be taking to prepare for situations like this in regard to short-term rentals? Okay, so we have a question here that wants to know what kind of preliminary action can investors take to prepare for situations like this? Okay, answer to that first question is savings. That's all I can say. I mean, these situations happen. There's clauses in contracts called force majeure, where it's like acts of God, pandemics, hurricanes, things like that. They do happen. It's very rare. I've never seen Orlando shut down. Disney World has never shut down their doors like this. I think the most they shut their doors down were like 1 or 2 days during a hurricane a few years back, but they've never done this before. So this is a very unique time we're in. No one's ever experienced anything like this. So I guess the only preventive measures you can take as an investor is to keep a healthy savings, for a rainy day fund like this. And in regards to short-term rentals, what can be done to soften the blow to rental loss? I kind of alluded to this earlier during the call, but pick a very pick the best property managers, because if you have a good property manager, they know what they're doing and they know how to pivot and shift with the environment.
Pivot and adjust.
Yeah, exactly. They know how to adjust, and so thankfully we knew how to do that. We knew how to adjust exactly what needed to be done to kind of make sure that our investors were still receiving rental income. So that's my answer to that question. Yeah, pick the best property managers you can find. The little shameless ModelR plug right there.
Thank you so much, Luis. And so we do have time for one more question. This one is a question for Zane. With the stock market the way it is, and home investment and diversifying your portfolio seems to be the best option. Okay. Zane, if you want to take this one away, this is from Stephanie.
Okay, yeah. As opposed to the stock market, I may not be the best person to ask because I'm actually buying right now personally. But I will answer on diversification. It is always the best way to mitigate risks in your investment is to diversify your assets. Not put, lack of a better phrase, don't put all your eggs in one basket. Simple as that. Just put your money in different places. It's the best idea, and real estate traditionally is one of the best diversifications you have, especially when it comes to short term, because you're generating revenue based on your investment, and then it's naturally increasing in its market value. That being said, with the way things are going right now, I honestly, I still believe it is. The diversification is the key. It's if you had all your money in the stock market now, 5 years ago, 10 years ago, when crashes happened, you lost a lot. I did. I had friends who lost everything. And the ones who have invested in real estate, even at downtimes, they're the ones who survive the strongest. Definitely. And it's just this joke about 90% of all millionaires come so through real estate is 100% true. But the same people who became that wealthy also diversified. So that's the most important thing to your portfolio right now, is to mitigate those risks. And I think real estate, especially income generating real estate, is still one of the lowest risk, no matter how you look at it. You're not looking at day-to-day crashes. You're looking at, if anything, a slower drop in revenue combined with another increase. Stock market's really volatile. In times that are great, it still sometimes goes down. So yeah, diversification is great, and real estate is still always going to be a strong investment because it does provide stability more so than your traditional stock or equity investments. To kind of talk about floor plans, honestly, all of our floor plans do really well. I would try, to say, a 4 and a 5 are going to rent well. 6 and above, or if you can go that route, or where you're going to hit more of your sweet spot. A 5 can do really well. But in our community, a 6 and above, it seems to be really what you get more for your money in terms of nightly rate. And I kind of touched the upgrades part of that a little earlier with features. It doesn't always have to be, if you're renting out this home, it doesn't necessarily have to have every upgrade that you would like to see in your home. If you're going to use this as a second home, then yes, put in these creature comforts, put in, a paver pool deck, put in, really expensive flooring. But if you're going to rent it out, there really is, there's a fine line in putting too much in it. Consider upgrading small things or doing visual upgrades, shower glass, some flooring, maybe increase the swimming pool if you can, depending on the home you choose in the lot. Those are the routes I would go. And those aren't going to be the most expensive upgrades on our list whatsoever.
And just to add to that real quick, in terms of like the most popular floor plan, I would say right now the homes that we are renting the most, who are generating the most ROI, are homes that are between six bedrooms and higher. So our 6 to 10 bedrooms are performing awesome. We have a few 12 bedrooms that are just absolutely crushing it because there's not a lot in the market. So if you guys have the capital for that, I would definitely say to get, one of these huge mega homes that are always filled. But yeah, the 6 to 10 bedroom range are the best. Again, our top performing right now is a 9 bedroom, but that's just because the furniture that's in there is phenomenal. The location, it's in Bellavita, so it's just everything just added up to that. But and then Zane kind of already mentioned what kind of upgrades make it more rentable. I 100% agree with that.
Okay, guys, so we did get one final question for Mr. Zane, and it is asking about the Bellavita Resort HOA dues. So what is the monthly payment every month for the HOA, and what does the HOA include?
Yeah, so yeah, we definitely did run by that, and that would have been great because that is, you know, money that they have to put out as opposed to bringing in. So the HOA at Bellavita is $275 a month, and that can be paid monthly, quarterly, or yearly. It includes exterior pest control, exterior lawn maintenance, common area access, and amenities, and as well as their maintenance. That it also includes basic cable.
Thank you. Thank you. Yeah. And the clubhouse amenities here at Bellavita Resort, we have a fitness center, volleyball court, basketball court, theater room. So quite a few amenities in our clubhouse. And like we have mentioned many times, every single home at Bellavita Resort does include a standard resort style swimming pool as well. So lots of great amenities and lots of perks to investing or even just staying at Bellavita Resort, as we have mentioned so many times. So for all of you watching, we have dropped all of the contact information for all of the panelists today in the chat below. So you'll be able to find my email, Zane's email, and Mr. Luiz's email as well. I believe they've also placed their phone numbers in the chat. And if there are no further questions, this will conclude our Q&A session for the day. And for those of you who have any further questions, you can feel free to email us, give us a call, give us a text, and we'll be more than happy to help you guys out with that. And again, I'd like to thank Mr. Luiz from ModelR for being here with us today, and Mr. Zane Place for being here with us today as well.
Absolutely. Thank you guys so much for your time. Everyone out there as well. Have a great rest of your day, and everyone stay healthy.
No, thank you very much for having me, guys. Stay safe. Wash your hands.
Alrighty, guys. And like we said, feel free to give us all a text or an email if there are any further questions. Other than that, guys, thank you so much for watching. We hope you all have a fantastic day, and stay safe and stay healthy.